weekend all. Ira Epstein with your weekend edition of your financial market update. And this wrap-up, if you will, is for January 10th, 2020, and we're just about 4:55 p.m. Central Time. Well, as you can see, a down day in the stock market, even though the jobs data was good. Now, if you look or have access to my morning subscriber video, I've been there saying I think this market's got big-time resistance on the first challenge of the upper Bollinger Bands in a number of the indices. It was the NASDAQ, the Dow, the S&P. The market that's been weak and not up there has been the Russell. But on the weekly charts, you get a different picture. So we'll take a look at those in a minute. You can see that the metal markets, they were up today across the board. Dollar down a fraction as foreign currencies gained some traction on them. Bonds and notes, a pretty big rally in these markets. So I think that number one, we're looking for impeachment this coming week. It appears that Ms. Pelosi is throwing in the towel. She's not going to get anywhere with the Senate Republicans, and they will decide what their agenda is going to be. They're not going to listen to the leader of the House. They probably give some credence to the Democrats in the Senate, but that's politics, and I'll let that play out. We saw more sanctions today go from the U.S. on Iran, and now there's more meddling. They're wondering about Russia attacking possibly the Biden campaign. I don't know. You never know what to believe with all that. But that's where we're at. On the energy market, still down in the Brent and the crude. Gasoline, though, got a bid and a little bit of bid in the natural gas. Now, Chicago's going to get a pretty big storm, at least the northern section from Chicago up to the Canadian border. And we'll see just how much they're talking. As we go further north, 6 inches of snow's talk. There's talk there. And of course, what we get goes east. The question is how high east, and that's what the market will count on to look for cold weather, snow, and so on. So that'll affect natural gas to a degree. As you can see on the monthly chart of the S&P, the market's up 33 points for the first, week and a half of the month or so? That's pretty impressive as I look at it. The market's still looking good there. When you come to the weekly chart, you're still up 29 points for the week. You don't look bad there. And as you can see, you had an outside week up. Now, we have to admit, with missile attacks and everything, a pretty crazy week where the market first took a nosedive off of fear, people panicking, what is it going to be, or is the U.S. going to re-attack Iran, and where does this whole thing lead? And yes, you can get out of control very quick. It didn't go there. The market calmer heads prevailed. The president was the president, and he didn't react in the way that many people thought he might. The market then regained itself and closed on a good note on a weekly basis. The daily charts don't look as good as the weekly. Now, when you have an outside week up, I always look at that for the next 2 weeks going. What I don't want to see is that number taken out. My theory is when you have an outside week, if you take out the low of an outside week, the market tries to break down to the closest moving average, buy it. You'll see what I'm talking about. This would be that number. Now, we are jumping on these numbers at about, if you can see, 16 points a week recently. So it wouldn't surprise me if this number gets up to the, what would that put it, 3112 or so? So that wouldn't surprise me that we get up into that zone. The market's 3164. The point that I'm making is if that were taken out, there's a good gap between where prices are and where they might be headed. That's all that I'm saying. The resistance we've been running against and not staying over, and that's an important point. Markets, when they first hit Bollinger Bands, it's like hitting a brick wall. Yes, you can keep moving higher against it, but they will typically 95% of the time stay within these bands. And that's what's going on. And what the pros are doing is they look at the breaks in the market. Did it hit some smaller moving averages than the 18? That's what I think the market's looked at. And momentum is still bullish. So while the daily charts gave up ground, that's okay. The weekly chart picture is still looking good. In the NASDAQ, another outside week up. So until this week's low is taken out, I'm looking for this market to hold that level, take it out, and somewhere between there and the potential of dropping back to that 18-week average would exist for me. In the Dow, same thing. Now, the Dow got up to the 29,022 level, another magic number, and from there it settled back at 28,777. Okay, so it fell back pretty good. Not a big event, but still for the week up 175 points. Not bad at all as I see it. In the Russell, as I said, this market's been the weaker and the weakest of the four. That doesn't mean that it's thrown out any sell signals. It has not on the weekly charts. It's still over the 18-week moving average of closes. It's been in a reactionary mode. It did not have an outside week to the upside. I see support if it wanted to break there, 1595, about 60 points lower, which would fit in if you started down in the other stock indices. You have to start factoring in also that while the market's backed off in some of the indices on the daily charts, we are going to have the signing of the U.S.-Chinese trade deal on Wednesday. There's going to be a lot of pomp and populace that goes to it, and everybody's going to be there. They're going to show the picture. The question is, has the market discounted it? I don't have the answer to that. In the VIX, we've stayed under the 18-week average of closes all the way back here since September. And the market just continues to drift lower as the market keeps taking out what? Volatility in the market. And yes, I know that that sounds absolutely crazy given the crazy week we had with the war scares that went on. But at the end of the week, you were still down nearly a full point in the VIX on a weekly basis. In the 10-year notes, the market rallied up enough today to get up to 130.06 over the last rally high. The downtrend leg that the market had as it went down and tried to get up down to the lower Bollinger Band negated itself. You're now out of a trend on the weekly chart. You have a higher high, lower low pattern. Nothing I see there. In TLT, you have a pattern of a lower low. Then the market gave a rally this week back to that line in the sand, where it's been finding resistance, the 18-week moving average of closes. So you stepped out of a downtrend, didn't ever get down to the lower Bollinger Band, a possible objective, and instead the market just is hanging right here, not putting momentum up or down, and it just sort of said, okay, I'm stepped out of the trend, where am I going to head? Dollar index still in an overall downtrend. When you look at the longer term charts, you've got lower highs. I'm the first to tell you, you also have higher lows. So you have a market that's doing this, coming in like that together, going to make a decision what next. Even if you went over 97.49.5, the question is, where does the 18-week average come in? And right now, it's moving at about 13 points at a time. So if it's doing that, it's probably going to get down into the 97.58 level, something there. In other words, pretty close to that high. We'll see if the market can do anything with that or if it wants to resume that downtrend. Momentum isn't giving us any ideas. While it's trying to get out of an oversold area here, some people look at it oversold. I don't. I look at it as the momentum is still down. It hasn't turned and really pointed itself back up. That could happen if it starts a minor rally early in the week. In the eurocurrency, whether it's a daily chart or a weekly chart, what I look at is when I see this sideways action in a market caught in these narrow Bollinger Bands, to me it tells me that a story. The story's this. It's like a price is a spring in a pipe, and it's winding itself, getting ready to move one way or the other. Now, right now, you've got momentum trying to point down. Prices ran out of momentum at the upper Bollinger Band. And remember, that Bollinger Band is like a brick wall. 95% of the time, it's not going to stay over it. That doesn't mean it can't eventually push out of here. In fact, in order to get a trend, it has to. So while it's pushing back and forth like this, the question is when it breaks out, and that's what you call a breakout. It's going to be to the downside where the market starts taking this action, really pushing it down, or does it break out to the upside, trying to make a run for the 100-day average back at the 114.80 level? We'll find out probably sooner rather than later. Mexican peso. I look at this market and I say the weekly chart's showing you that the noise on the daily chart against the upper Bollinger Band is still a market that has got pattern of a higher low, higher high. You're very close to this market getting a bullish crossover, which is when the 18-week average of closes gets over the 100. The thrust often leads to markets making a higher high. Certainly the dilemma, and I won't change my story on Bollinger Bands, is the first challenge of it is a resistance zone. Here's why I think the market's acting better rather than worse. The Senate has said, and Mr. McConnell, the senior senator, has said to us that USMCA will come up once they get the impeachment articles. Ms. Pelosi said it's going to be next week. In the Canadian dollar, the market had a nice run up to the upper Bollinger Band. The Canadian the Mexican, as you can see, did it once, tried to get to it, didn't quite. It's acting a little stronger trying to get to it, and you've backed off from it on the Canadian. But when you look at the pattern, you've got a lower low, higher high, support in between the 76.09 and 75.85 level. Japanese yen, you would expect that you'd get a bid in the market when war talk and war actions take place, and I would say the firing of missiles at the U.S. was a war action. The market rose on it, and as fast as the president shut it down, the yen gave up the whole gain, and from top to bottom it looks pretty miserable as the market has given up about 130, 150 points. Support the 100-week average of closes, and that's where the market stopped, right against the 100-week. It could drop into that lower Bollinger Band yet. This is a pretty important move. I wouldn't be surprised to get bounces out of here, but until you take out the high you made this week, it certainly has all the elements of a panic-type top that went nowhere. Bitcoin's trying to move up and away. We know that an event called halving is about to take place, and the market's been pricing it in. For the week, not the day, look for the week, you're up $750 at 81.35. The pattern is one of higher lows, higher highs. The settlement at 81.35 was not able to get over the resistance I'd expect, the first challenge of it, at the 18-week average, and it failed against it just the way it did back here. So now is that going to result in anything? Well, we've got the 100-week average here, so we keep a very, very close look at that. If that's supported and then the market, or if the market just gets back up and starts up, the $10,000 level at this point, and that's going to drop a little next week, is where the weekly resistance is. But the 18-week average, it's that line in the sand. Markets often fight there. On the weekly differential between Brent and WTI, in this environment, and especially when missiles went flying, you would expect that Brent would gain on WTI. Our oil isn't being threatened. It's the world oil, Iraqi oil of over 4.5 million barrels a day, certainly the Saudi oil. I mean, you got a hotbed there. The good news is nothing happened, but the market's keeping a bid on it. Think of what, if you have a tanker, you've increased the insurance, anything going through those straits, they're going to be keeping that. And of course, naval fleets are showing up. Japan's naval sent a destroyer there now. It's not going to fight with the Iranians. It's on what they call a fact-gathering service, where they keep NATO allies, other people informed as to what's going on. In the Brent itself, blow off top? Possibly. You went up here, just like you did back here, and in these areas, and you have failed against an important zone in that $72 area, market pulling back right now. And the question is, what's going to make it get back up and over it? You've had the scenario that is the most bullish. It was high enough to match when the Saudis got attacked on their oil, if you'll recall, and people think it was Iran that did that, and that lasted a brief time. I have no difference than to think that maybe that's what we're at, but it's an outside week down. Support's closer to 63.20. I wouldn't get overly bearish here, but I question if we're going to take out that top anytime soon. In the the WTI, it's the same thing. And if you'll notice, this market having trouble at what number? You see that black line, these upper Bollinger Bands? Pay attention to them on charts. 95% of the time, the market has trouble staying over them. So here you're over it, you're leaning yourself to it, and now if you get the warfare and you're bullish, market nailed you. And again, buying over a Bollinger Band is one of those things, if you take my charting course, no, I don't recommend it. Gasoline, up, tried to get to the 100-week average, did not stay over the upper Bollinger Band, right down to the 18-week. Now, the difference in gasoline, it has very strong seasonals that start to pick up to the upside very shortly. So this decline in it is interesting because gasoline prices have a tendency come late January to start moving back up into March as the market gets bid again. And of course, we all know summer driving isn't that far away. The heating oil market, if I knew nothing else, I know what I teach. When you're up to the 100-day, the upper Bollinger Band, you're in a resistance zone. The market stayed over it last week. Forget this week. This week, I watched as the market went up, and I kept saying, is it going to hold? Can it be a real breakout of that? The answer, flat no. Now, heating oil is also one of these markets still in an uptrend. Yes, you've got higher lows, higher highs. So I would not be surprised to expect the market to start fighting for support against this 18-week average. Do not forget, we are at January 10th. It is going to get cold in the Midwest and the East Coast. I realize we've had this phenomenal warm weather, but winter will arrive. Now, whether it's shorter or not, we know that the problem for that is each day that goes by, you don't make up typically, and it's been mild. But I wouldn't be surprised if this market tries to get its legs under it. For those of you that like my special reports, I thought today I'd have the time to do an oil report, or gasoline is what I was really honing in on. It just turned out we got too busy, and at the end of the day, I'm a broker, so it just could not do it. But I will have one out. In the meantime, if you haven't seen my gold report, from when I put it out 2 or 3 days ago, I think it's as accurate the day I recorded it for today. It goes off our website by Tuesday. So if you want to take a look at it, now is the time to do it. You go to www.iraepstein.com. It'll look, and you're going to see charts that look similar to all these there. Now you're going to get me talking about what I think the events are in the market. I'm going to show you what a price count is and how I use them. I'm going to show you the seasonal charts, the 30, the 15, and the 5-year. Then I'm going to take you into the weekly and the daily charts, and it's all about, in this particular report, gold. It's my first one that I've done in a couple of months. I think you should take a look at it. How do you get to it? www.iraepstein.com, and go up under the word research. You'll see it right there, and I think the date is January 8th. I'm Ira Epstein. You have a good day.